Hello everyone, George DeSantis here with a look at the market for the week ending March 3rd, 2017. Let's take a look at the disclaimer before I go to the charts. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. I am not an investment advisor. Let's begin by taking a look at the monthly chart of the S&P 500. This is the monthly chart of the S&P 500. Before we discuss the monthly chart of the S&P, I just want to mention, as I think I did in an email, that I went to the annual Traders Expo at the Marriott in New York City. It's always very interesting. If you ever get a chance to go there, it's in February every year, at the end of February, and it's very, very interesting. You get to meet a number of people who are very actively trading the market. You get to meet some of the very experts like Larry McMillan, who has written the text on options. And more recently, we met Stephanie Kammerman, who it was very interesting in discussing the dark pool and how she uses the dark pool to initiate trades based on the high volume trades in the dark pool by big investment houses, and she's been very successful at it. So if you ever get a chance to go to the Traders Expo, it's a wonderful thing to do. Now, as far as the monthly chart of the S&P 500 is concerned, we've only had a couple of days of trading here, of course, but we can see that we ended the month of February in with a very nice close very near the top of this bar for the month of February. Uh, Nothing much has changed here. We just have a very powerful uptrend on the monthly chart. So we won't spend much time on it. Parabolic is below the most recent bar. MACD continues to trend up from below the zero line. And Alex Elder's force index is very, very much in a bullish area. So let's turn to the weekly chart. Here's the weekly chart of the S&P 500, and as we can see, the Kalman filter, it's really the 4 week in this case, simple moving average, remains above the instantaneous trend line, the blue line. So what we find here is that the weekly chart is riding the upper Bollinger Band, that dotted line, and we came out of a bit of a squeeze here, and we're riding this Bollinger Band up here now. So that's bullish. The parabolic is remaining below the most recent bar, and that's indication that there's no reason to reverse this uptrend. The percent R with a 30-day period remains above 80%, so that's pretty bullish. It says that the momentum of this up move is very strong. RSI 12, that indicator we use for the trend on a weekly chart, is still above the 60% line, so that's very good. That's really bullish. And MACD at the bottom of the chart continues to trend up. So we can see that the weekly chart is also very bullish. Let's take a look at the daily chart. So here's a daily chart of the S&P 500. We can see here that the Kalman filter remains above the instantaneous trend line. So that's indicating to us that this trend is still intact, this uptrend. The parabolic is still below the most recent bar, so there's no indication that this trend is reversing at this time. It is certainly come closer to Friday's bar, to close on Friday's bar, but it's still below the most recent bar. So that's not an indication to do anything, to say, well, the trend is reversing here. Now we should note that since we pull back a bit here, we're closing around 2383. The support level The next support level should be 2370 or so, right around this level. And should we break that, the next support level goes all the way down to about 2350. So those are just some markers to pay attention to. Um, at this time, it seems as though uh, we can go either way here because the Bollinger Bands, we've ridden the Bollinger Band up here, but now we pull back a bit on Friday. So we'll see how it develops later on in the week, next week. Now, Jerry Appel's sum of the rate indicator is still above the 4% line, so it's on a buy signal if we're using this for an indication of whether we should be in the market or not. MACD is pulling back a bit, but that's not too unusual for MACD to do this sort of thing. We don't have a divergence, and that's really the most critical thing we should look for. So there's no divergence of MACD from price right now. And percent R is above the 80% line. What we had here was an attempt to close the gap. I think that this is an attempt to close the gap between the close here and the open here. So we'll see how much more of that closing of the gap occurs, if it occurs at all. All right, let's look at the NASDAQ, the weekly chart. So this is a weekly chart of the NASDAQ composite. And as we can tell, it's still riding the upper band of the Bollinger Bands. And the Kalman filter is still above the instantaneous trend line. So all of these indications are that the trend is up. The parabolic is below the most recent bar, last week's bar, so no indication to reverse this uptrend. In the middle of the chart, RSI 12 is showing some real strength here as a trend indicator. It's telling us this trend is very strong. MACD continues to trend up from, above the zero line here, and you can see that the fast average is above the slow average. So all in all, the weekly chart of the Nasdaq is very strong. Also, excuse me. And let's take a look at the daily chart. And here's a daily chart of the Nasdaq Composite. What we see at the top here of the chart here is that the Kalman filter is still above the instantaneous trend line. So technically the trend is up. We've had a pretty bearish bar here, and then we had a bullish bar here. It looks as though after this big run up in February, that the market is consolidating at about this level here. So we're looking at a trading range. This trading range I'm defining by the mouse, if you look carefully here. So it seems to me that we're going to consolidate some more, maybe pull back a little more to the instantaneous trend line before we go higher. But we'll see. I mean, the market has been pretty strong, pretty stubborn. All of those who are expecting it to crash are still waiting for a crash, you know. In the middle of the chart here, Jerry Appel's sum of the rate of change indicator trended down a bit, but it's still above the 4% line, so it's still on a buy signal that occurred here. MACD, yes, indication of some loss of strength. In fact, it's in negative territory now, minus 2.65. However, there really isn't a divergence from price. So we're sort of marking time here, I believe, in a trading range, and we should be going higher from here. The Elder Force Index at the bottom of the chart is pulling back a bit here. However, it's not trending down that much to tell us, well, we should reverse the trend. So I believe that this market is looking to complete this trading range and then go higher from here. Let's take a look at something else. Here's a weekly chart of the ETF SSO, excuse me, which I use to trade the index, the S&P. It's leveraged twice. So you can see that CCI, the indicator I use on this chart especially is CCI. You can see CCI found support at 100% and now it's trending up. So it's a hold on SSO. as far as I'm concerned. Let's take a look at something else. Let's take a look at some of the charts at the stockcharts.com site. This one is the chart of the new high, new low index. Alex mentioned in his weekly letter that I get from him that that the new high, new low index has weakened on all time frames, meaning monthly, weekly, daily. So I thought we should take a look at it. And sure enough, you can see that here, that the new high, new low index has weakened on this time frame, which is a daily chart. And of course, MACD is also showing some weakness on it. So that's something we should bear in mind. He is looking for this market to hit a top sometime soon, you know. We'll see how that develops. Let's take a look at something else. And on this weekly chart of the S&P 500, we can see that the current bar, well, the latest bar, uh, last week's bar is green. So we're allowed to buy this market. We're not allowed to short it, let's put it that way, according to Alex. This is Alex's indicator, the impulse bars. Now let's take a look at the daily chart. The daily chart looks a little different because it was green and then we pull back closer to the 9 exponential moving average, the green line. So that's not unusual at all. You can see it happening in a number of places here. Let's take a look at something else. And here's a chart we've seen before. It is the percent of stocks above the 200-day moving average in the S&P 100. And the key thing here is that 65, the level of 65 is critical. As long as it stays above 65, we should be okay. If you go back to 2015, we can see that when it broke down below the level of 65, where my mouse is right now, right here, you can see that that's when we had that pullback in the market in 2015. And then in 16, we went back up above 65. So this is something we'll keep an eye on. Let's see something else. And finally, here's a chart with the McClellan oscillator, and we can see that it's broken down below the 200-day moving average. So there's reason to be cautious here. It might just be that this market is going to be showing its true colors, and that the market is overbought. We all know that, but it can remain overbought for a long period of time. So we just need to be cautious. If we own stocks, we take some profits perhaps, or buy some protection. Anyway, that's it for this week. I'm still holding stocks. I have an ETF portfolio. Took some profits on some of the big ones I had, big positions, Apple, Netflix, etc. But I still hold a few things like Home Depot, the ETF portfolio, Bristol Myers. That's still working very well. We'll try to do this again next week. Have a good weekend.